So Bitcoin is still above $35,000. It spent quite a bit of time there. So I wanted to look at the chart and see what is happening. Are we looking at some sort of distribution for a drop that is coming, or are we going to get further upside and continuation from here? Let's dive into the charts and take a look at what we can see. If you're not yet following me, be sure to subscribe or follow my page down below, so that you can continue to get future updates. And in case you need a reminder, I'm still running my Black Friday special offer to join my VIP membership until the 28th of this month. It's the lowest prices that I've ever offered it at, with the most amount of bonuses. If you want to get in, it's simply the best deal, 60-day money-back guarantee. The link is in the description down below. All right, so diving into the charts here, you can see Bitcoin is at 35,256 at this point in time. And you can see what we have here on this chart is this kind of pattern here where it's kind of slowly grinding up, but at the same time, potentially, could this be like Wyckoff distribution? Could it be forming a top here that is going to bar back down? Or do we see a continuation up from here? That is the question, and that is what we're going to have to wait and see what happens. Because you can see it does tend to make these patterns over here, like you can see a similar pattern where it kind of grinds up and then we get this pullback and then up, and then this was kind of a funny one. You can see a similar thing over here. We got up and then eventually this grind back down. Similar here, you know, we get this long kind of pump up, quick sharp rally, it distributes over here, and then we had a drop back down. So the question is, what is it doing this time? Is it creating this pattern here of this consolidation that it goes back down? And what happens from there, right? Does it go up from here, or does it do this? Or does it do this? There's basically a couple of options, and it's always a good idea to be prepared for multiple scenarios and follow a strategy of if then. So if it breaks down below a certain point and if it gets a market structure break for the bearish price action, then potentially we're looking at more downside. So what do I mean by market structure? It is simply a way to define a trend. So a bullish trend makes higher highs and higher lows. A bearish trend makes lower highs and lower lows. And when we get that shift, a break in bullish market structure, you can see all it's been doing here is making higher highs, higher high, higher high, and even this whole point, it's making higher highs. So technically at this point, this trend is still bullish. We get a market structure break when we set a lower low, which is below here. So if we get something like this, then that would potentially be the trigger here for a short. At this point in time, shorting it is basically just gambling on downside without any reliable way of it happening. Whereas if we get the market structure break, it is a signal that now maybe the trend is exhausted. You can see it's made now a lower low over here instead of a higher low. The trend has potentially broken, and that gives you a much better chance for taking a short with a stop at the highs, targeting wherever lower, 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 lower. So with this pattern in mind over here, while it does tend to, throughout the bear market at least anyway, result in, you know, this move up distribution and then a drop back down, in the bull market, if it is fully bullish conditions, this can actually result in a break to the upside and continuation of this bullish trend if it is really bullish. Let me show you that. So you can see here, if we go back to 2020, after the halving, October 2020, you can see this is exact action that I'm talking about over here. So like you get a big move like this to the upside, you get that what would normally in a bearish market or bearish conditions, or if it's a scam pump, result in distribution and back down. In bullish conditions, it tends to just be a consolidation and the uptrend continues. And that's why in bullish conditions, trying to short markets, trying to catch tops is much more difficult and much more dangerous. If you try and short this all the way while it's going up, you just get wrecked. You get stopped over and over and over again. So in bullish market conditions, and the easiest way to define that is when the 3-day chart or the price is above the 3-day 50 moving average and above the 50 and 200 week moving average, which currently we are. That is just full-blown bullish conditions. During those conditions, you want to rather be looking for longs on pullbacks and continuation rather than trying to find shorts on these types of distributions, because more often than not, you can see even here, right, we get this distribution, this grind, and it just continues higher. It continues higher. You can see even over here, we got a big move up. We see this kind of distribution in a similar way that we're seeing. And instead of it breaking down like it normally would in bearish conditions or in a bear market, it just continues higher. And if every time you try and short these things that look like Wyckoff or distribution, while it's not really had a break in market structure, the chances is it's just going to break to the upside, and shorting that is just not a profitable strategy in a bull market. So what is this time going to end up giving us? Is this time going to be different? Yes or no? At this point in time, we still haven't had a bearish market structure break, which I would say at least would be under 34.5. So we want to get below here. Like I drew before, maybe even below here. We want to see that get below there. Then we have that confirmation that potentially the trend is breaking, and that's when we can attempt to short. For now, there is still a chance that it just continues to consolidate here and potentially continues the move up and potentially goes to like 40,000, when most people are trying to short this, betting on, you know, something like this happening or something like this, which we've been conditioned on throughout the bear market and throughout the past. So let's see what ends up happening here. Either way, just manage your risk. Be careful with if you're trading with leverage. Be sure to always have your stops in place and know what you can lose at most when you're wrong. And in theory, from a professional trading standpoint, you should be losing 1% of your trading account when you're wrong. Meaning, you know, if you have a $10,000 trading account, you're only risking a maximum of $100 when you're wrong, whether it's a long or a short position. And it just needs to have a good risk-reward ratio. It needs to be a good setup, and then you can attempt stuff. But generally speaking, in bullish conditions, you want to be longing pullbacks rather than trying to short what looks like maybe tops. Again, if you want to learn more about trading in part of my VIP membership, I have a complete 50 lesson trading course about all this analysis that I always do here on YouTube. Everything that I'm sharing with you here, Wyckoff distribution, liquidation levels, longs and shorts, ranges, all of that stuff, all these concepts about trading are explained in great detail in that course. And on top of that, literally on a daily basis in the Discord, I provide real-time ideas, market insights, chart setups, all that kind of stuff. So it's really, really worth it if you do any trading. If you're interested in crypto, if you're interested in investing, come and join my VIP. It's 60-day money-back guarantee. So you can come try it all out, see if it's for you. If you're not happy, you can get a full refund. But if it all works out, you will see an enormous amount of value, and I think you will appreciate what you get. So link in the description down below. I'm still holding my Black Friday special offer till the 28th of this month. Best deal that you're gonna get. Sign up, click the link down below, and I will see you in the next video.